Welcome to the CIY Capital Daily NASDAQ Futures Recap. We're going to break down exactly what happened in the NQ today, March 4th, and, more importantly, what it means for your trading tomorrow. Let's get right into it.
Wow, what a session. I mean, the main story today was this absolutely massive V-shaped reversal. We saw this ugly flush down to 24,499 early on, only to watch buyers just pile in and trigger a nearly 660-point rally right off the bottom. It was a textbook case of morning fear getting completely wiped out by afternoon greed. So what on earth caused a swing that big?
Well, this slide really tells the tale of two tapes. We came in weak, with those overnight jitters about geopolitics and inflation still hanging in the air. But then, the U.S. data started rolling in, and it was hot across the board. Strong ADP payrolls, ISM services hitting a multi-year high, and even the Fed's beige book pointed to stable growth. The market basically had a choice: trade the fear or trade the facts. And it chose the data, big time. It was a huge bet that this strong growth won't force the Fed's hand and that a soft landing is still the play.
And if you look at the session stats, you can see that whole story right there in the numbers. We opened with a little gap down, sold off hard to that 24,499 low, and then just spent the rest of the day in a monster uptrend. Finishing up 1.2% after a morning like that shows a huge shift in market character from the open to the close.
All right, now this is the slide to pay attention to. If you trade NQ, these are the lines you absolutely need on your chart for tomorrow. Resistance is the session high, right up at 25,158. The big one, though, is 25,000. That's your key pivot. Everything hinges on that level. Below it, you've got initial support at 24,755, and the ultimate line in the sand for the bulls is today's extreme low, right around 24,500.
So was this just an NQ story? Not a chance. When you look across the board, it was a broad risk-on confirmation. The VIX, the fear index, it got crushed. The US dollar weakened, which is usually a tailwind for stocks, and we saw money rotate out of safe havens like gold. At the same time, bond yields ticked higher, which signals money flowing out of safety and into growth assets like tech stocks. The whole picture was just screaming that traders were putting risk back on the table.
This brings us to a beautiful textbook setup from today, the reclaim of that 25,000 pivot. That was the big tell. Once price got above that level and actually held, it offered a super clear long entry. This is exactly the kind of high probability setup we cover at CIY Capital in the live trading sessions. It's how Ron teaches proper risk management. You have a defined entry, a defined stop, and a defined target. It's not about gambling. It's about following a process.
So, how do we trade this tomorrow? Our plan is actually pretty simple, and it's built around one number, 25,000. For the bull case, as long as we're holding above that pivot, the target is a retest of the high up at 25,158. Now the bear case kicks in if we lose 25,000. If that happens, it puts support at 24,755 right back in play. It really all comes down to that key pivot level.
And look, whether you're brand new to futures trading or you've been at it for years and just want to sharpen your edge, the coaching at CIY Capital is personalized for you. Ron works with you one-on-one as your trading coach to build a trading plan that actually fits your capital, your schedule, and your risk tolerance. You learn a clear process, and you can even start small with micro futures or practice on a simulator with zero risk. To get started, just send a DM to @RonRoseTrading or visit CIYCapital.com.
And that's a wrap on today's recap. Just a reminder, this is for educational purposes only and is not financial advice. If you want to learn to trade futures or find a trading mentor who offers one-on-one coaching, check out CIYCapital.com or follow @RonRoseTrading for these daily NASDAQ futures market recaps. We'll see you tomorrow.